Pat Lopez, where we talk everything real estate. Today, my guest is Lee Caparas, Quaint Oak Bank, commercial relationship manager, commercial loan officer, right?
That's it.
Perfect. Well, Lee, welcome to the show.
Pat, thank you. Thanks for having me.
Okay. So I always start off my shows with asking my guests to tell their story. So how did you get started in the commercial lending business?
Absolutely. So I got my start in banking 25 years ago. And I started in the branches, as a teller, and kind of just made my way up through the retail side. And about a little over 20 years ago, I was with an organization, PNC Bank at the time,
right,
and they were building out their small business segment. And they put me in the position to become a small business banker, where you were working with small businesses, and that was really my sweet spot. I've had different positions throughout the years in banking, but I've always loved to come back to commercial banking and small business banking.
Okay. So SBA loans, because that's where I want to talk about. What is an SBA loan? Let's just start off with that question.
Sure, absolutely. An SBA loan is a business loan that is backed by the federal government, so the Small Business Administration, hence the term the SBA. It's a loan product that provides some flexibility to business owners at different stages of their business cycle, and it just gives them potentially other options from just conventional, business loans. So it's a good option and a good talking point for business owners, just because they may not be aware of the fact that there could be a product they could take advantage of, and that's what the SBA is.
Okay, and then how many types of SBA loans are there?
Yeah, so there's three key types. There is what's called a SBA 7A loan. There's another one that's called an SBA 504 loan, and there's another one that's called an SBA Express. And I can certainly go through those details with you.
Okay, great. So why don't we start with the 7A, because you mentioned that first.
Right.
So why would I get a 7A and not a 504 or an Express? What is a 7A?
Absolutely. So the SBA 7A loan, the 504, and the Express all kind of serve its own purpose. The 7A loan is more or less a loan that's more for like equipment purchases, things that maybe you want to do some smaller leasehold type of improvements as well too. And that's generally where you would use a 7A loan. Now, that being said, 7A loan amounts can go up to $5 million. So certainly you could be looking at some pretty large equipment pieces and things like that.
Right.
If you go to 504, 504 is a little bit different now. That's more incorporating real estate and maybe the renovation of a business owner buying the real estate and then needing the funding to renovate the property so it becomes something for their business. And then the last one is an SBA Express, and that just provides some working capital for the business. It's a nice thing to have, obviously, with a business's daily cycle, where they may have needs for purchases, inventory purchases, maybe some things for payroll, working capital, and that's what typically an SBA Express loan does for them.
Okay, so why don't more people do SBA loans? What do interest rates look like? I know that varies, of course, but like generally ballpark, and I don't want to hold you to anything. I know we're just having a conversation. So, I don't want to get you.
The rates have been going all over the place. So yeah.
But just in general, what kind of rates, what kind of terms, what do these loans look like?
Sure, absolutely. So, typically when a business comes in looking for financing with a private lender, such as a bank, the bank offers their own types of products. So that being said, typically you go through underwriting and through that process, and you're able to get perhaps a conventional loan.
Right.
However, sometimes, based on, obviously a bank underwrites it based on risk,
right,
and prices according to that as well too. There might be some things there on looking at a conventional loan where, it might create a little bit more of a risk for the bank in terms of the risk profile of this particular loan request. That's where you look at, can SBA help?
Okay, well, let me ask you that question.
Yeah. So
the risk that you're talking about with an SBA loan, that's guaranteed by the government. So how does that offset the risk of the bank?
Yeah, absolutely. Great question. So, that speaks to the different types of products that we have. An SBA 7A loan provides the bank with a 75% guarantee from the government. So let's just say in this particular case, the borrower unfortunately defaults on their loan.
Right.
The SBA then says to the lender, we're going to make you whole up to 75% of what the defaulted
So on $1
amount
million,
is.
they would give you $750,000.
That is correct. That is
So
correct.
that's where that mitigates the risk.
That mitigates the risk. On 504, it's a little bit different. There's some nuances with that, but what that 504 program is the bank is only into that deal, that project, 50%.
Okay.
So you have a project that's, let's just say, $1 million. Right. The bank is then only into it for 500,000. So that mitigates risk as well too. So it's and then also and then on the express, it's a small amount. However, the bank said or the government says will cover up to 50% of that. And so so that's where we have the different product types.
Okay, and then what is involved on the underwrite? Like what kind of paperwork are you asking for? And when you say conventional, we're talking about commercial conventional, not residential.
That is correct.
Okay.
That is correct. Yep.
So, is it all the same documentation, tax returns, W-2s? I mean, are they asking for business history and projections on, what do they ask for?
Yeah, no, that's a great question. So typically for any type of a business loan, you look for the financial package, which is historical data, which is, in the form of tax returns, maybe in the form of accountant prepared statements, but you look for historical tax returns. Right. A lot of times where an SBA comes into play is that particular business may not have that long-standing track record of historical financial performance.
Right.
However, they have the ability to say, by doing this type of loan or getting this type of funding, they are projected to do a lot better down the road. And for that, they create a projections worksheet that shows, oh, wow, this is, if I hit these numbers, these are the projected sales, this is the projected revenue, this is the projected net profit. And the SBA allows that type of financial analysis so that they can provide those types of loans. So it is definitely where it is an advantage to the business owner that doesn't have a long track record of like at least 3 years of being in business, but they need the financing within that period. That's where the SBA is a help.
Okay, and then what happens if you're a startup? Can you utilize the SBA loan as well?
Yep, absolutely, and that's where once again the SBA itself they not only provide you with some resources and you have like a mentor to work with for the new business owner, but you want to have a what's called a detailed business plan. Okay. Talking about the ownership structure and then within there built-in projections. And that will help you be able to get, as a startup business, potentially financing. Because typically for banks and conventional loans, they're looking, once again, at historical perspective. Right. But if you're a startup business, you don't have that. And that's a big issue. So
okay, so I heard mentor. So that, who's a mentor? How does that?
Yeah, absolutely. So SBA within SBA themselves, they have their programs within SBA, and you can see that right off their website, sba.gov. And they also work with like an outside firm that's called SCORE. And SCORE has, it's folks that volunteer that have been previous business owners, right. Maybe have been previous lenders in the past, and they're just there to help support and really just get certain businesses to the place that it looks good for them potentially to be a candidate for a loan for a business loan.
Okay, so then what I'm hearing and what I'm surmising may be incorrect, but if you're just starting out, you don't have a long track history, it's a little bit easier potentially to qualify for an SBA loan than a regular traditional commercial conventional type of loan.
Yes.
Does that sound correct?
Yeah.
Or
well,
you right?
Pat, you're a smart guy, so your surmising is on point. Actually, yeah, that's exactly correct.
Okay, so that's what they're there for. They're there to help small business, to achieve and to be in business, basically.
Definitely. Yep.
Okay.
And it also, SBA too, and why it always should be a consideration for a business owner just to see is it does provide certain advantages as well too. So for instance, in a business real estate transaction of an owner occupied property, mind you, it does not, investment real estate doesn't qualify for SBA. It's owner occupied. But that being said, if you identify a property, that you want to move your business into, the SBA program actually allows you as a business owner to put less down. So that potentially you could put 10% down, where traditional, conventional commercial business loans that are issued by banks are typically require 20% down and finance of 80%. So that's again why it's a consideration also of SBA.
Okay, so the SBA, you can put 10% down?
You could put 10% down.
Okay, so 10, not the traditional 20-25% down.
You're exactly correct.
Okay.
You're exactly
Okay,
correct.
so you could do that.
Yep.
And now, as far as rates, where are rates ranging? Because I know it could be different and depending on the day, that kind of thing. So is there a range where rates generally fall?
Yeah, no, that's a great question. So rates are always on SBA are typically tied to the Wall Street Journal prime rate.
Okay.
And as I know and quite a few people, just every time the Fed seems to meet, they've been raising the rates up there. So, but it is typically tied to prime. Right now, the prime rate is about 8.5%. You're most likely looking at a range of maybe 11%, maybe 11% to 14%, or you know what? Let me say this: maybe about 10 to 14%, kind of
so
like that.
So you're looking at the prime rate plus 3, 4, 5, or 6, depending on the credit worthiness and the credit. Now, who determines that?
Yes. Yep. That's determined by the bank and also by the SBA. It's actually a combination as well too. And the reason for that, obviously, is you are priced. We price based on risk. Right. So once again, the risk profile of a business owner that may be looking at SBA, to maybe mitigate certain other risks. That's why the rate tends to be higher. But also, too, bear in mind, as we talked about that scenario, if you're a business owner that says, you know what, I don't want to put as much down, I want to put the minimum down, that's 10%. That is obviously,
a little bit.
Yeah, that's also kind of a risk because you're only putting less down on a total project than what you would if you did it conventionally. So there's give and takes to both, but once again, it's options, and the important thing is for the business owner to know that they have options.
Right, and then it's personally guaranteed, right? So they're going to put liens maybe on your house, on the equipment, on your sister's brother's, dog, something. They're putting liens, right?
Absolutely. But once again, it depends on the type of SBA loan, and it depends on the structure as well. Right. I mean, if you're talking some of the smaller amounts, let's just say you're a business that's starting up, and you want to have some working capital to kind of get stuff going over here. You might be looking at something like $50,000. In that scenario, having it government backed, they may not look at collateral at that stage, but you start to look at higher loan amounts. Then you do look at that, and collateral becomes not only potentially the collateral being the property, but also some perhaps personal assets as well too, because the bank and the government want to be covered.
They want to be covered. You can't take the bank's money.
Got it.
Like everybody knows. Big proud upon it.
Absolutely.
Okay. So, Lee, if somebody wanted to know more about SBA loans, how would they get a hold of you?
Yeah, absolutely. Yeah, I appreciate that, Pat. And I'm happy to have those kind of discussions as well too. I mean, that's the beauty of my job as a commercial loan officer and relationship manager, is just being able to educate and being an advisor as well too. But yeah, you can reach me. I'm available via my cell phone, which is 856-904-3137. I can be reached via by calling or by texting through that number. And then also you can reach me on my email, which is Caparas. So that's LCAPARAS @quaintoak.com.
Okay. And then we'll put those numbers up so everybody will be able to see that. So you don't have to write it down real quick. So we have you covered. Okay, well, thanks for being on the show. Really appreciate it. Learned a lot. I mean, I had an understanding, but I just and I do understand your time, so I really do appreciate that. Well, it's the Real Estate Show with Pat Lopez. Remember to follow the show on Facebook and Instagram and subscribe below. I have some great guests, some really good content lined up for you. Also, leave a comment. Tell me things that you like, you didn't like. And tell me what show topics you want me to cover in the future. Remember, this show is everything real estate, no limits. Hope you enjoyed the show and